Good day, everyone. I hope everyone can hear me now. But welcome again to our webinar on the withholding tax regulations for 2024. My name is Esiri Agbeyi. I will be the host, hopefully for today, for a session that's going to last for an hour and a half. And it's intended that we would unpack the new regulations for 2024 with assistance from quite a number of experts who would be on the call. This is a virtual session. It's not intended that there would be a fire drill, but there might be a fire drill where you're sitting. If there is one, be sure to find the exit, please, and zoom out as quickly as possible. Please get a beverage close to you as well as we look into unpacking the regulations. Our agenda for today is quite short, one where we do an overview of the regulations, and then we go into the panel discussions where we would have interesting experts that will unpack the regulations. And so on that note, I'd like to have us put up the screen so we can quickly go into the overview. What are those regulations? What do they mean for us as businesses? What do we need to do as well? And hopefully, as we go through the regulations, questions will emanate, and maybe you have come with your own questions prepared. Be sure to use the Q&A button or use the chat link as well. We do have a number of co-hosts who will be going through those questions and discussing them on the call. For today's call, we do have Chijioke Uwagbete, who is our tax leader and the primary host for this event. Unfortunately, he came down with a bout of illness and can't turn on his video. We do wish him fast recovery as well. But I think in the course of this conversation, his audio might have to come up as well because he's really eager to contribute. So sorry about that, Chijioke. We also will have Ken Erikume, who is our tax reporting and strategy leader, and he would be anchoring the panel discussion. And we have Tim Siloma, one of our partners with the tax and reporting strategy team as well. I told you that we do have interesting guests who will be part of this session with us today. One is no other than Taiwo Oyedele, who used to be with us. It's interesting that I have to now introduce him as someone on the other side, but he was the major inspiration behind the regulations that we're going to be discussing today. We're honored to have Taiwo, who's the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms. And that committee, interestingly, was tasked with implementing very critical fiscal governance and economic growth reforms. At a time like this, you can imagine that that is probably one of the most difficult tasks in Nigeria today. Thank you, Taiwo. Taiwo actually used to be our tax leader as well across Africa and in Nigeria. And it's such a delight to have him back with us again. Welcome on board. We also do have Micheal Olufemi Olarinde, who's the head of the Fiscal and Tax Reforms Division at the Federal Inland Revenue Service and a special advisor to the executive chairman of the FIRS. Micheal comes with a length of experience working in the tax policy and admin division, and he has a wealth of experience, as you can see from his profile and qualifications, that makes him really suited for this discussion. Welcome on board, Micheal Olarinde. I don't know if he's joined yet, but when he does join, I'm sure his video will come on. And so on that note, I'd like to quickly move on to just give us a snapshot of what these regulations mean. Maybe you haven't seen them yet. Maybe you have seen them floating around on the internet, but this will give you an opportunity at least to refresh your memory on what this contains. As we said before, the regulations were introduced by the Federal Ministry of Finance, and the objectives we will look into in detail really hover around easing, doing business in Nigeria. It came out first with an effective date of 1st July 2024 when it was first released, and a later date for gaming activities on 1st October 2024. However, the Gazetting, which is the official publication of the regulations by the government, only happened on 2nd of October 2024. And with the gazetted publication, we had a change in the effective date to now 1st January 2025. It's something as well we will discuss as well and unpack during this session. The objectives for the regulation included setting out the rules, at least as presented in the regulations, setting out rules for the deduction of tax at source from payments to taxable persons, and it effectively overrides any regulation that you knew before now. So this is your North Star when it comes to withholding taxes. It seeks to remove complexities in the deduction of tax at source. It seeks to reduce the rate of deduction for sectors with low margins. And it seeks to also provide exemptions for small businesses and manufacturers, a very, very welcome development. One of the objectives it also portends is that it promotes the ease of compliance and administration, one which we will hopefully dive into in the course of the panel discussion, to curb taxation, to reduce the arbitrage between corporate and non-corporate business structures, and to align it as best as possible with global best practices. And I know the committee did spend a lot of time in a lot of surveys, stakeholder sessions, where most of these were discussed and participants had the opportunity to actually contribute to co-creating this regulation. So anything that comes through from here is on everyone here. And I think we owe Nigeria, that important obligation to make it better as we go, one step at a time. But before we go into the details, the final details of the regulation, I want to welcome everyone to quickly take a quick survey that we have. Very few questions. If we can put up the survey now. We're actually using Slido. Yeah, so we have the questions on the side. If you check the right-hand side where you are, you can actually see the questions under the chat box. You'd see something called polling, and right under that polling, you'd see the questions just come up. First question, how familiar are you with the new 2024 withholding tax regulations? Very familiar, somewhat familiar, not familiar at all. Second question, what sector of the economy do you operate in? Is it gaming, energy, oil and gas, manufacturing, or entertainment? We're interested and curious to know, those of us on the call today. What is your biggest concern? Third question, regarding the new withholding tax regulations: increased administrative burden, higher cost, understanding the new requirements, or ensuring compliance? And the last question, what type of support would be most helpful? Detailed guidelines and documentation, training sessions and workshops, one-on-one consultations, or online resources and tools? And then you can click submit. Okay. So I think we still have some time left. If you haven't submitted your poll, you can still see the questions there while we go ahead, and the answers for those questions will be presented later on in the session. Okay, so I'd like to just quickly go through the key changes, just talk on them briefly, and then we can move on into discussing in more detail. 4 key changes that I'd like to highlight here. On the commencement date, the regulations are effective from the 1st of January 2025. Please take note, to remember that date. And it's aligning with the 90-day implementation national tax policy. So an effective date of October, but then we have a transition period up to 1st January 2025, which is the implementation date. And during that time, the tax authorities can actually issue guidelines for the effective implementation. It also allows for systems to be upgraded to allow for the many changes that will come on board. In terms of withholding tax administration, one key change we see is changes in the rates, as we knew before. So sale of goods are now subject to 2% withholding tax, with exceptions where the goods are directly sold by the manufacturer or on over-the-counter sales. And there are other specific exemptions which we'll look into later. Customers are now required to issue the withholding tax receipts to vendors, quite different from what we had before, where the tax authorities used to issue that. And then in terms of deductions and timings, persons that qualify for deducting taxes, we no longer have the qualification on a payee scheme being operable. You only have to be a person that falls in the category of businesses, governments, MDAs, and payment agents, except certain individuals and small companies who must now withhold taxes. So in small individuals, certain companies don't have to withhold, but then all the other categories, they have to withhold. Withholding tax should now be deducted at the earlier of payment or settlement with specific rules for related parties and passive income. On offenses and fines, we do have quite a number of interesting ones. One where if you have taxpayers without their tax identification number, it's an offense pretty much, and then you bear the cost of it. So there would be a double withholding tax rate then applied on the beneficiaries of those amounts, and that's not something anyone is looking to. Secondly, we have that receipts will be issued where tax is deducted but not remitted will attract the withholding tax, penalty, and interest. And customers who fail to deduct withholding tax but pay vendors in full will have an administrative penalty plus a one-off interest. The good thing there is you don't have to pay the withholding tax. The key exemptions as set out in the regulation are, as I mentioned earlier, across the counter transactions. Interest and fees paid to a Nigerian bank by way of direct debit would not suffer withholding tax. Goods and manufactured or materials produced by persons making those supplies do not attract. Telephone charges, internet data, airline tickets, out-of-pocket expenses, insurance premium, supply of major oil and gas products, commissions as well, and winnings from a game of chance on a reality show designed exclusively to promote entrepreneurship, academics, technology, or scientific innovations. At a glance, these are your new withholding tax rates. They range from 0% to 2 to 5 to 10% and 15% and 20%. So if you look at the director fee line, you can see it's higher at 15% for residents and 20% for non-residents. You have the rates differ according to whether you're corporate or a non-corporate recipient, and you also have them differ according to your place of location or residence, whether you're non-resident or resident. So it will do us good to also look at these rates in more detail. But this just tells us that a number of changes now need to happen to systems for thorough compliance. And maybe to start off or ease us into the panel discussion, it's just some of the gray areas coming up and concerns that have been raised. One around the integrity of receipts. If taxpayers will now be the ones issuing the receipts, are there going to be irregularities in the receipt numbers, and how do we ensure integrity? How do the tax authorities start to validate this so that the audits do not become entirely lengthy in the period of validating whatever credits individuals or businesses have? And that applies also to the credits. For non-residents that now require to have TINs, otherwise the withholding tax will be twice the rate. How does the tax authority plan to address this? And how do we consider the double withholding tax that would now be imposed on customers who have to bear those taxes? And does that really align with easing the cost of doing business? And very closely to that is around the double withholding tax rates as penalties, which seem very high. And I guess for me, the key question is, what approach will the tax authorities now adopt to avoid lengthy audits, seeing that we have quite a number of rate changes? And one of the key cries around audits, whether it's from the federal or the state, and the numerous audits that taxpayers have to go through, is how can we make our tax audits a lot more efficient and a lot more risk-based? Last but not least is around early adopters, but also some industry specifics. Because the regulation was issued on the 1st of July 2024, and indeed was an enactment as provided under the law, key questions around those who have adopted early and how that translates into the new one come on board. And on that note, I'd like to also share the results very quickly. I don't know if we'll be presenting that now before we go into the panel discussion. On the questions around how familiar are you with the regulation, we had quite a big number saying that they weren't familiar with it. Is the slide coming up? Or because I was seeing that just a while ago. Okay, so I just kind of read, what I have. So a lot more people saying that they're not familiar, but then we do have some people familiar. About 71 of the respondents here, 71 people are the ones familiar with it. On the sectors, we have a lot more people from the energy, oil and gas space present here, and then manufacturing. And then on the biggest concerns coming through, it's really around ensuring compliance and understanding the nitty-gritty of the regulations, which is a good one because then we're going to have the panel discussions coming on board. In terms of the type of support, the first answer that's really jumping up here is around detailed guidelines. I think a lot of work would now be required from the authorities in terms of the guidelines, training sessions as well. But we also do have a tie with online resources. I guess now that we're in a digital world, it's important that some of these things now start to be digitized to make it easier for businesses. And on that note, I'd like to welcome Kenneth Erikume, if he's on here, so that we can get started on the panel discussions. Ken, you want to turn on your video? And then we'll also have our guests, Taiwo and Micheal.
Thank you very much, Esiri, for that fantastic job you did in sort of setting the scene around the new withholding tax regulations. I mean, a lot of people have been waiting in anticipation for this. The first signed one came out from the minister, and then people were saying, we need to wait for the Gazette. But now it's out, a lot of excitement, but we now need to deal with it. First of all, I must thank Mr. Taiwo Oyedele for joining us, and Mr. Femi Olarinde. I know you've taken time out of your busy schedule to be with us in this session, and we really appreciate you for that. And I'm sure a lot of the stakeholders who joined today's session are grateful for this time to engage with you. So we'll try to make it as engaging as possible. So I'll just say, I'll start with you, Mr. Taiwo. Listening to a series opening, and you've been working, in your committee on this for a while. What are your opening statements, and what would you like, the stakeholders that have joined this session to know about this new regulation?
Yeah, thank you very much, Ken. Thank you, Esiri. Thank you, PwC, for organizing this and inviting me. And good morning to all the participants. The opening comment for me will be around the fact that the whole essence of this reform is to try and keep things simple and to help improve the business environment. So we set out doing this work with 5 important objectives. The first one is to try and simplify the whole deduction at source system, which we call withholding tax. Being someone who was also in practice myself for over 2 decades, I could say authoritatively it was the most complicated area of tax compliance for those who wanted to do the right thing. It was completely unnecessary for it to be complicated. The second objective was to reduce the burden on businesses, particularly small businesses. Number 3 is to ensure that we have some form of equity and competitiveness such that our businesses are able to compete both locally and then internationally, because if you deprive them of their cash flow, then it increases their costs and then they are unable to operate efficiently. The number 4 objective is we need to deal with tax evasion, right? This is even completely bigger than just generating revenue. If you allow a system where Ken and I are doing the same business, and Ken is a very honest guy who complies with all the laws around, he pays all his taxes, and I'm the guy who, in quotes, is smart. Maybe I'm also very well connected, I don't pay taxes. What's going to happen is, if I don't like his face, I will price him out of the market because I have extra money to play around with. You cannot grow a society to the one that we dream of by allowing innovation to continue. So we set out intentionally as well to address issues of tax evasion within the reforms. And then finally is to try and reflect emerging issues, both locally and internationally. For example, you would have noticed that if you are a director in a company, what we have seen from data is that directors, if their companies remember to deduct the withholding tax, that's all that they pay. Many of them don't know they have to declare the amount and pay the balance of tax. So we had to increase the rate so that it reflects fairly the amount of personal income tax they should pay in the first place. The same thing we've done with international transactions, where we've seen that you have final tax payments, global minimum tax, threshold. We've taken all of that into account in developing the new withholding tax regulation. So I think it's important to keep those in mind. It will not be a perfect law. Not likely that you have a perfect law, especially not at the first attempt. But I think that the general feedback is that this is a significant improvement from what we've had previously. So I'll stop there, Ken.
Thank you very much for squeezing it into that short nugget which you just produced. And like you said, laws are not perfect, and I think as stakeholders we're hoping that it will continue to be refined. But I liked your example where you used me as a nice guy. I think you've confirmed to the world that I'm a nice guy. Thank you very much. Mr. Femi Olarinde, from the FRS perspective, what are your opening words and what would you like taxpayers to know and be aware of?
Okay, thank you very much, the PwC, for inviting us and inviting me to be on this panel, especially sitting with Mr. Taiwo Oyedele, who I admire so much. Good morning, Mr. Taiwo, and good morning to everybody. It's nice to be here. Well, for us at the FRS, we are just like someone who has been given an instruction. And of course, if you've been given an instruction to perform some task, some instruction that comes with professionalism and expertise, the only thing you need to do is to deliver that instruction as professional as possible. Though we know the law and we know everything the law prescribes us to do, withholding tax is also a quasi-legislation. It's a subsidiary law which derives its power from the Companies Income Tax Act. And of course, we understanding, and the Personal Income Tax Act. So we understanding the law, understanding the regulation, we are going to marry both of them and administer the law as we have been given the mandate to, with our law, which is the Fire Establishment Act. Yes, from the summary that has been given, there are some policy issues that may be identified that we may need to go back and sit down and also think through. Also release implementation guidelines and rules to the public so that they could understand better, so that everybody will be on the same page. And also, definitely, we're still going to consult with Mr. Taiwo to support in all those areas too when we are developing those policy and guidelines, so that everyone will be on the same page. And at the end of the day, when we are discussing with taxpayers and when we are providing when we come back to you and say you have erred one way or the other, you will know why we have said so. Not because we want to victimize, or not because we want you to do the right thing, and we too, we are going to do the right thing. We're going to deal as professional as possible. And for some issues probably that have been raised, we also continue to reform our system every day. We continue to see those things that have not we believe have not been up to expectation. We try to address them. From the summary, there's been a lot of question about how FIS we enforce, how we are going to audit, and those issues. So we are happy to tell you that we understand what it takes to be professional, and we are going to put that in consideration in everything we do. So without much ado, I think I will stop here since it's an introduction part so that we can discuss the main issue. Thank you very much and good morning.
Thank you so much. Thank you so much. And for attendees, you can ask questions using the chat function. Just to remind you, in the bottom right of the screen, you will see that chat tool there. You click on it, and then you click on panelist, so that you can send your question directly to the panelist. If you leave it without clicking on panelist, then it will go to everybody. So if you just click on panelist, then it goes directly to the panelists. So thank you very much for that introduction, Mr. Olarinde, and thank you for also highlighting the fact that FRS will be coming out with guidelines and clarification so that taxpayers would actually be on the same page. But one of the things that obviously has been a burning issue has been the commencement date. And I know FRS has already issued a circular on that. But there were some people who started applying the regulations when that copy that was signed, one way or the other got into the public. And maybe they've been applying reduced rates compared to the higher rates which were in the old regulation for that intervening period. And I think it's important to clarify that point. So Mr. Olarinde, I will start with you. What is the FRS thinking? I know that guideline has come, but would there be some sort of relief for those people who have just taken that regulation and say, oh, we've gotten something from government, can we begin to apply? What are your thoughts?
Okay, thank you very much, Kenneth, for starting with me. The beauty of this regulation is that it tries to address most of the issues we may face. And in your opening, the person that opened had summarized and provided some background of the regulation. And also, I also like the fact of the survey that you did before starting this. And I think the survey said, is it about 78% or is it 68%? Said they were not aware of the regulation. So it makes the issue easy for us. So if by now most of them are not aware, well, it means that they've not started implementing. And so there will be a reduced number of people we will have to deal with when it comes to early adoption. So for me, the regulation clearly states that the implementation will start from 1st of January 2025. Then it states that for those who have that we will provide guideline policies and rules when it comes to early adoption. So what it means is that may now be on case-by-case basis in most instances. So we are open. The regulation clearly specifies that we need to provide such guidance when it comes to those who have early adopted. Yes, they've adopted because government is one, the minister approved, they were guided by that and they adopted. So the regulations have given us the opportunity to engage with them and also understand them. And so we are open to that. Like I said, it's instructional material to us and we are going to work with it. So FRS is open to discussion. Thank you.
Thank you very much. I'm happy with at least that commitment to look at things on a case-by-case basis, and that the FRS is open. That's the customer-centric FRS, which we are encountering today. So thank you very much for that comment. I'll take one to you, Mr. Taiwo, and this is around the issue of persons that are required to deduct. So previous regulation was had a bit of ambiguity. Now it's clear who should deduct. But one of the things that is not clear that we encounter is for non-resident persons. Non-resident persons without a permanent establishment, they have no fiscal presence in Nigeria, but they may have registered just to do VAT, for example, or they may have registered a digital SCP. Currently there's really no guidance around that, but in terms of what is intended are those groups of people with no fiscal presence within scope of persons that are required to deduct.
All right, thank you, Ken. Let me also welcome my brother and my friend, Mr. Olarinde, to the call. I also have to put on record that the FRA has been extremely supportive of our reforms. So they participate in almost all our discussions and engagements, and I think that is good for building such a transformative effort as what we're doing now. Along with the members of the Joint Task Board, I think they're even the most represented on our committee. So that we do not take for granted because it's very important. You asked a question earlier on, before I come to your question on non-residents around the commencement date. So I just want to give a bit of context, which is that we set out with the intention of let's get this regulation drafted, do as much engagement as we can, get the minister to sign, and then let's give this our so important minimum of 90 days, and then we gazette, and then we implement. So that was the plan on paper. We also know that from past experiences, sometimes if you don't put a date for commencement of a law or regulation, someone will forget at the last minute, and therefore, based on the Interpretation Act and the Act Authentication Act, it will take effect the day it's signed. So the 1st of July was inserted there just to prevent all of this. And the minister actually signed the regulation much earlier. But gazetting was not as simple or as easy as many of us would have liked to see. So there was a lot of complication going back and forth. We had to first do the internal stuff within the relevant organs. Then we have to deal with Ministry of Justice. Once you're done with that, there was Ministry of Information for gazetting. And they all have, sometimes there are different ways of interpreting what commencement date is acceptable, which one is not acceptable. And where they saying that based on national tax policy, you must give 90 days. While we're doing all of that, the document got leaked. So the version that people saw that has 1st of July was not officially released, even though what people saw was authentic. So we couldn't deny that it wasn't authentic because we're not going to lie to the public. So that's why government was silent about it, right? But the reality is, if you think about the substance, the essence of gazetting in those days was to communicate to the public. There wasn't internet when they came up with the whole idea of gazetting. So which means, on one hand, we also don't want to punish taxpayers who saw the document. They may not even know whether it's been gazetted or not. They just saw it was signed by the minister, and the minister did not deny it. So maybe they started implementing, particularly because most of the provisions were very beneficial to taxpayers, which is the intention. So that in itself made the gazetting even more complicated, because once it was leaked and it has a commencement date, that started a whole lot of conversation with the FRS, Ministry of Justice, Ministry of Finance, our committee, Ministry of Information, up until the last minute when that regulation was gazetted. We're still struggling with how to deal with the commencement date. We eventually landed on what was eventually published, which is that the commencement date is 1st of January 2025. So from the date it was gazetted, that gives you the 90 days. So we tick the box on national tax policy. Number 2 is that because we know some people saw the leaked document, even though it was not acknowledged officially and they had started implementing, we thought we should provide the opportunity to accommodate them if they have compelling reasons as to why they had implemented earlier, not to shut the door to them. So for that reason, we allowed the earlier adoption from 1st of July. So you now have 3 dates. It was gazetted 2nd of October. Commencement date is 1st of January 2025, but earlier adoption could be allowed from 20 July 2024. Now we give the discretion to the tax authority. It's not even only FRS. You have the LRS. You have other state internal revenue services who also collect withholding tax. So what we would encourage, what the FRS put out, is just to make sure that not more people don't go and create problems for themselves. I do not think that it means that the door is shut to 1st of July. And of course, the sentence they put out was a couple of paragraphs. We most likely will expect them to have a more detailed guideline. So I'll say let's use this window that we have between now and 1st of January to have this conversation, and for stakeholders to send their input. They can send directly to the FRS, they can copy our committee, and let's think together about how to make this easy for us. The intention is to make life easy, not to make it more difficult. On your point regarding non-residents, so what we have in Regulation 4 of that regulations is if you're incorporate, like a firm like an enterprise, you do withholding tax. If you're a government ministry, agency, or department, you do withholding tax. If you're a statutory body established by law, you do withholding tax. If you're a public authority, you also have to do withholding tax. Then any other institution, right, including those that are exempted, because you may be exempted from income tax, that's on your income, but you are paying other people who are liable to withholding tax, you have to deduct. And anyone representing any of those persons. So where does the non-resident come in? If a non-resident person has a presence in Nigeria and they're doing business in Nigeria and therefore they have suppliers that they are paying, then they have to do withholding tax deduction, right? How they do it is going to be a function of regulation from the FRS, because we already have the legal framework that allows for fiscal representation. If you don't have the means physically to do it in Nigeria, and you cannot do it remotely, remember that even under our significant economic presence order, we have non-resident companies that are even accounting for VAT. So it cannot be the reason anymore that just because you do not have bricks and mortar in Nigeria, you cannot comply with the laws in Nigeria. To the extent that you have the presence and doing business in Nigeria, you need to comply. You may be able to do that through agents or fiscal representation, whatever works for you. And we're open to having this conversation so that the implementation is as simple as possible.
Thank you very much, Taiwo. I got carried away listening to you. But one, I think, yeah, you're 100% correct. I think it'll be useful to have that engagement and interaction, because the issue really is, if you bring them within scope, then what is the extent of the scope? Is it just to domestic vendors or foreign vendors? And would things like passive income come within scope as well? So those are some of the issues I think would be useful to tackle within the guidelines.
Sorry, just to clarify, Ken, we're talking about making payments, right? So if a non-resident is making payments, it means that the person they are making the payment to, right, is a person who is liable to tax in Nigeria. So if it's passive, it's very unlikely that a non-resident who has no presence in Nigeria will make passive payments, right? Interest, dividend, rent, right? So if it's active income that you're paying, then it means that someone in Nigeria you've engaged to work for you is doing some work for you and they're earning active income, professional fees and all of that, and you're paying them. So I understand your point, because we also don't want to be very different from the rest of the world in terms of compliance. So if at the end of the day, the solution we're able to find is you have a presence in Nigeria, you do withholding tax. You don't have a presence in Nigeria, you don't have to do withholding tax. We haven't said anywhere in that regulation that non-residents specifically must register. We only just gave scenarios and instances where you have to register and what makes you eligible for that registration.
Thank you, Taiwo. I think that's the sort of clarification we're looking for and guideline from the FRS that we're looking for. Mr. Olarinde, I'll come back to you around one significant change in terms of administration is that people don't have to get credit notes. And I know that the FRS invested quite heavily on Tax Pro Max to ensure that people get their credits immediately payments are made. But this regulation seems to be fairer, right? Because this regulation allows for people to take credit when the payer, the person making the payment, deducts the withholding tax. The person can just issue a receipt saying, I have deducted, and that should suffice for a credit on the FRS end. Now, that would create a mismatch between, if the person hasn't gone to remit, what's on Tax Pro Max, and the actual deduction that the person or credits that the person is able to get for income tax purposes. So how does the FRS expect to implement that portion of the regulation and track and validate such withholding tax? Do you have any thoughts or insights into that?
Okay, thank you very much. I'm sure you also understand the complexity of the question you've asked, and that's why you're asking me. And also how challenging it's going to be for the FRS, though we believe that, like you said, some people don't need to have credit notes. I'm not sure the law says that you should not issue credit notes again. What he's just saying is that now, even the former law, I think even in CETA, it says that whoever you deduct should give a receipt. However, what has not been happening is that the FRS has not been recognizing such receipt until we can confirm that payment has actually been done. We understand that it seems like you've appointed an agent and the agent have deducted the money, you have done the obligation you asked the agent. However, you're going back to the man who is supposed to pay the money and say, oh, sorry, I've appointed an agent, but I've not sent the money. Then we understand it looks like if you're now making the man who is paying the money to now bear the brunt of your agent. So we understand this issue. So it's just about the contract of agency. And what the law is doing is to ease doing business and also help taxpayers. We understand this fact. And so the receipt that has been issued, we help to make it easy for taxpayers. But like, we're going to implement this? You're not asking. Yes, it helps with reporting because, of course, you must report it. It's now help with reporting. For you who have been issued such receipt, you come to claim your credit, you have reported such case. We are digitizing very, very well. We are digitizing. And so we know that there is another leg. If such has been reported, we can now go after such person. So enforcement is going to deal with this. Of course, we believe that it's not everyone who is going to ultimately be compliant. Enforcement is going to deal with it. We know that majority of this issue has mostly been with the MDAs, and that is where probably we have been having some issues. We are in very much We have a cooperation with the Office of the Accountant General right now that will help to ensure that this is done smoothly. We also have did something recently. We have officers who serve as liaison to many government agencies. So you go to NCC today, there's an FRS staff who is a liaison who ensures that all payments done by NCC, they deduct the right taxes and they remit as and when due. So many of other government agencies, we have appointed officers whose only job is to liaise with them and to ensure that every tax obligation concerning them is done adequately, is adequately taken care of. Now we continue to expand this to other organizations, especially those that we appointed to deduct. So for us, we believe it may not be business as usual, we believe it may not be easy, but we believe we are ready to work with this and we are ready to surmount every challenge that comes with it. I believe I believe that answers your questions. We are ready as the law has prescribed for us. Thank you.
Yeah, so Mr. Femi, it addresses the question, but it doesn't land it very well. So
okay,
I just want you to land it. When PwC, for example, provides a service to a company XYZ, right? And on my Tax Pro Max, I cannot see the credit of the withholding tax on Tax Pro Max. So my tax liability is 100, right? But the person has given me a receipt for 20, right? But that credit is not showing on Tax Pro Max. The law is saying I should be able to get a credit, so I should pay only 80. So that's what the law says. I just want to be clear whether that's what we would expect in reality. I know it's probably putting you on the spot to give a commitment, but that's the sort of clarity we are looking for.
Let me take that question, right? Because I also, like you said, I don't want to put the FRS into commitment they're still working on. So I can tell you what it is from the policy side, because even the FRS, just like taxpayers, are working on how to implement this, and which is why some of these engagements we're having are important. So the first thing is, to be honest, we've not done anything extraordinary. So more than 20 years ago, when I was on secondment in Kenya, the KRA had booklets. So you go and collect, a taxpayer will go and collect the booklets. They're serially numbered. And when you deduct withholding tax, you just fill it out. And that person presents it and they get credit. This was 20 years ago, 2004. So 20 years forward, we can't be struggling with implementing something as simple as that. So the FRS had made a lot of improvement in terms of digitization. So the way this should work, and if it's not working like that, we have to make it work like that, is that you send your invoice to a client, they deduct 1 million naira from you. What we envisage in this regulation is that they write the receipt for you, which is also your credit notes, and then they remit the amount to the FRS. So the double entry is cash goes to government cash account is debited, and your account is credited. Simple. But about scenario 2, this guy has deducted 1 million from you. He has not remitted, but he has given you the receipts. What we have now put in this regulation, which is different, and I think it's fantastic, is because no debit has entered government accounts, we are saying nonetheless, you should be credited, which means the double entry hasn't been completed. So the person that deducted the withholding tax from you is debited. So the person will see that their tax liability just goes up by the amount of withholding tax they had deducted from you, and they haven't remitted. So the balance, double entry has balanced. And that person who deducted from you will be liable to pay that amount plus penalty and interest, depending on how quickly they remit it. So all that the FRS just needs to do is to implement this within Tax Pro Max. But we also know that the conversation we are having is not limited to FRS. Even State Internal Revenue Service have to implement this. Just do the double entry, get the person who deducted to pay if they haven't remitted, and we'll fix it in a matter of, in the next couple of months. This will not even be a question in my view, because it's not complicated to implement.
Absolutely, Taiwo. And this is what taxpayers are looking for. Because, I've been, in practice, we've seen cases where people deduct the withholding tax and are not remitting, and then it becomes a commercial dispute. Meanwhile, it is a tax payment because government has appointed an agent. So instead of government to get involved, the person, is then forced to do a commercial dispute with their counterparty. But I think when you have that process or system that, identifies that this person has taken a credit, from this customer with the tax identification number, and automatically that obligation moves to that person, it creates more trust in the ecosystem. And that's what people are looking for. But I appreciate that processes have to be upgraded and technology has to get involved for it to be implemented. But based on your response, that is the ultimate intention, as I've figured. Yeah. Anyway, so just to jump into another question for you, Taiwo, related to that, is on refunds. And we talk with the FRS says they're giving refunds. We talk with taxpayers, some of them say they've received, some of them say they've not received. So what's the government's plan on making refunds? Because one of the things that happens with withholding tax, and I know this regulation addresses some of it, in terms of ensuring that low margin businesses, the withholding tax rates are either reduced significantly or removed altogether. But it's still possible in practice that someone has withholding tax taken from their income, and they are not able to utilize all of it, especially under significant, adverse economic environment, and people are posting losses. So it's possible the person is posting a tax loss and unable to utilize all of their withholding tax. So what is the government's plan on making refunds more obtainable and the refund process more seamless, and ensuring that trust is created within the tax ecosystem?
Yeah, thank you. Just to close on the withholding tax credit note. So one of the things we've done in the regulation, you will see there's a format there that you have to adopt when you are writing that credit note for the customer or the supplier on whose income you've deducted withholding tax. So the information included in that regulation, in that format, is meant to provide the minimum information required for this to work effectively. So to your question on refunds, this is also one of the areas where we have prioritized in our reforms. Just as a way of reminder, one of the core objectives of our committee is around economic growth facilitation and competitiveness, where we said to ourselves, why don't we remove impediments to business growth? Why are all businesses struggling? And one of that reason is clearly cash flow and working capital cost. So when you retain my money and you call it withholding tax, and it turns out to be more than the liability I'm owing government, you just and I'm borrowing at 35% from banks. I've just borrowed money to go and give to the government. It can't be the way to grow businesses. So one thing we have done is to try and address that problem from the roots, which is that why are we over deducting? So we're very scientific with the rate that ended up in the withholding tax regulation 2024 that we're talking about today. So much so that we expect that it will be an exception rather than the norm for anyone to have tax liability that is less than the withholding tax that they have suffered. And that even when you have that exception, it will be temporary. If things are hard in the economy, or in your sector, you may have that situation for 6 months, 1 year, and then it should even out. But in the event that despite all of these, you still end up with excess withholding tax that you need to recover from the government. The other thing we are doing already, and I believe many people on this call will be aware that some bills have gone to the National Assembly, including the economic stabilization bills. So there are actually 15 different bills that we call economic stabilization bills, including the ones that would allow taxpayers to pay all their taxes in Naira. So you won't have to worry about VAT and withholding tax and looking for dollars to pay. Then we also have 4 bills. Those 4 bills, one of them is bringing all our major tax laws together, from VAT to companies income tax to personal income tax, stamp duties. And what we have included in that is a provision that allows, not even allows, that mandates the Accountant General to credit dedicated accounts on a monthly basis based on estimate from the FRS. So FRS at the end of the month will say all the refund requests I've received that I have verified is 15 billion naira. And that note goes to the Accountant General and the account is credited before sharing to FAC, because our view is that that is not government money in the first place. So you should not be asking for, government is not doing us a favor by budgeting for it. So that amount that is credited on a monthly basis is a rolling account. So if the FRS spends 14 out of that, 15, then there's 1, and then they do the balance. If they need more than 15, then that goes to next month. And the other thing is to allow taxpayers to use their refund in one account head to cater for tax liability in any other head. So you have excess withholding tax. Why can't you use it to pay VAT? Why can't you use it to pay even PAY? Because we are hoping we can also integrate this system with subnational. So why this is not going to be a silver bullet or huru overnight, but that whole process of dealing with refunds has already started with the withholding tax regulation, the stabilization bills, and the new tax bills that are currently with the lawmakers going through the legislative process. So we hope that in a matter of months, or sometimes 2025, we talk about these and we have good stories to tell ourselves.
Thank you very much. Thank you, and we're hopeful. Actually, looking forward to those the implementation of those bills with our breaths on hold. Mr. Femi Olarinde, I'm coming back to you on FRS, and one of the things that people have been talking about is the issue around the fact that we have multiple rates, and historically, so under this new regulation, we have 0%, 2%, 5%, 10%, 15%, 20%, right? That brings its own complexity, and historically, the FRS has done audits using a rationalization basis. So they'll come look at your profit or loss account, and based on that, say this transaction is rent 10%, this one is this 5%, and then people have to then go back and begin to justify why the withholding tax shouldn't be on that basis, or they prepaid, it was an accrual, and payments had not been done. But this new regulation sort of clarifies when the withholding tax will be due, and takes off some ambiguity. So would there be any changes in the approach to the audits by the FRS? How does the FRS intend to carry out audits going forward with these multiple rates and with this clear definition of the timing of payment of the withholding tax? Just your thoughts on that. Sorry, Mr. Olarinde, you're on mute.
I don't know if the issue is from my side or your side. I don't know if anyone can hear me.
I can hear you now.
I can hear you now. Good. Because
okay.
Towards the end of your question, I couldn't hear you. Yeah, I lost. So
apologies.
What I heard is that if FRA is going to be changing the approach when it comes to audit, instead of coming and levying 5% on your turnover or whatever. So the first thing I would say is that FRS and FRS staff are not robots that just come pick your document and levy 5% or 10%, as the case may be, especially when the rules are changing. I say every time that tax is law, and for everyone who is going to implement, who is a tax, has anything to do with tax, definitely needs to know the law. You don't just go do audit based on a rule that has been given to you by someone. You need to understand that the law have changed, and these are some of the issues that comes with it. Definitely, it has to be scientific. We are also going towards a lot of digital-based audit, and not just picking documents and some officers putting in 5%. The approach is definitely changing, and it has even changed. I would say by now it has changed. There's a lot of improvements in our audit system, and we've even tried to ensure that there's no more the delays that have to do with audits are easily taken. I'm sure if you're studying FRS, the structure system, you know that we now try to keep both keep everything within, keep the audit within the operation group, so that they can easily address it. There's no discrepancy between the people on the field and the one that is doing the audit. So for us, as much as we know the law, we know what is supposed to be done, we are also digitizing processes, and it makes it easier, even when you're doing all this. Automated base makes it even identify your rates when it's due, and to take them as the case may be. So we understand the law. We are also doing in our implementation plan. I actually head the implementation team of the FRS, and in our implementation plan, we will be there will be a lot of capacity building for our staff, so they could understand the best way to implement these reforms. So not just we saying we will do it, we are also going to be training our staff on what they need to do. And opportunities to participate in webinars like this is also for us to bring up those issues that may likely are in the fall, so that we can use it to better our processes. And thank you for the question. We are able and we are ready to do what is right to ease tax payment in Nigeria and ease doing business.
Thank you very much for that, Mr. Olarinde.
Yeah, let me add quickly to that.
Okay.
So I think it's even more an issue for the sub-national. First, I don't want us to give the impression that we now have far too many rates, right? Even before the withholding tax regulation 2024, we had like 5 before, right? You had, if I follow your pattern of presentation, there's 0% where you don't deduct. You have the 2.5% for construction. You have 5%. You have 7.5% for some treaty countries. You have 10%. So that's like 5. So the only ones we've added, so we changed the 2.5 to 2. So you no longer have 2.5, right? So the only ones we've added are only just 2 categories. And they are not things that you encounter on a day-to-day basis. Number one, 20% is only applicable to directors. So if you have directors, we pay them fees. Just remember that it's no longer 10, it's now 20%. The second category are really exceptional one for non-resident because of global minimum tax and trying to just be fair to everybody. So if you're a sport person or you're an entertainer, so you call Beyonce to come and perform, right? So that's not something you do every day. Non-residents, sports betting and entertainers, 15%. And then the other one is lottery. So lottery, 15% if you are non-resident. So while it would seem that we've added a couple of rates, but these are not things that 99.9% of businesses will even have to deal with ever. So in that exceptional situations where they have to deal with it, they just need to get it right. And it's also the reasons why, one of the reasons why we exempted small businesses who lack the capacity to understand and they cannot hire consultants. But if you're a firm that is paying, entertainers from abroad, just get people to help you understand withholding tax rates.
Thank you for that, Taiwo. And I think, I would, I want to stick to that question a bit more. And I agree with you on the fact that, when you unpack it, maybe the rates are not as many as we think. So that's a good feedback. There's one that could be particularly interesting, which is when you have traders in goods applying 2%, but manufacturing sellers is 0%. Usually what we used to have with Mr. Olarinde, we may even have your input on this one. What we used to have in the past sometimes is convincing the FRS that the lower rate applies in a particular situation. In this particular case, this exact case I've provided, what would be the approach from taxpayers? Do they have to give their customers a certificate of manufacture? What sort of documents should they give? Otherwise, it would then be a case that they always have to go and seek for a ruling from the tax authorities to confirm that they are selling as manufacturers rather than traders. So maybe first person to answer the question, Taiwo, I'll refer to it to you first, and then we can come to Mr. Olarinde from the FRS perspective.
Okay, that's fine. So again, just take a step back and say, if you manufacture or produce anything and you're a small business, you don't need to worry about all of these things we are talking about, right? That's the starting point. So if you are not a small business and you are manufacturing, it shouldn't be hard for the people you are dealing with to know whether you're a manufacturer or not. Because manufacturing, apart from cottage, which is exempt because they're small, is not something you need to tell someone that you're doing before they would know. And if you have this exceptional instance where you're not sure who is manufacturing it, then maybe they should just try and get a ruling, or you write to them to give commitment to you that they're the manufacturer, so that if they lie and there's subsequent liability on your part, you can go back to them for remediation. So if you think about real examples, I would struggle to find a scenario when that would be a big problem. It might be a minor one. So you're buying cars, you're buying laptops, you're buying, maybe you're buying milk to take in the office. You know the people who are manufacturing it. So most of the things that you consume, you know the manufacturers. Because you also brand most of those things. If it's not branded, it's most likely done by a very small business who does not need to comply with withholding tax. So once we're able to find practical scenarios where indeed this would be difficult to implement, I think it would also help the FRS with their own regulations as well.
Thank you for that, Mr. Olarinde. I'll give you examples of FMCGs that sell products that they import and just sell, and they also have some lines that they manufacture. So, for their customers, distinguishing those products could also be a challenge. So, your thoughts as well?
No, but it's not the product, it's the supplier that you are focusing on, right? So it's not the product.
That's correct.
Correct. And I don't want to promote anybody's product here, so I'm struggling to make my comment, but let me just say Milo, right? Yeah. So if you are buying Milo and it's not from Nestle, whoever is selling to you is not the manufacturer.
No,
right?
no. So I think that wasn't what I was talking about. I was talking about cases where you have a multinational manufacturer in country that does both, imports to sell and manufacturing. Of course, I see your point that many times the people buying from them would know which of their product lines are imported and which of their product lines are manufactured here locally in Nigeria. So, but I think without unpacking it and without knowing the specifics, we know theoretically it can happen that you have this sort of ambiguity, and historically FRS will not automatically just give you the reduced rate. But Mr. Olarinde, your perspective as well.
Okay, thank you very much for that question. In my many years in tax policy, issuing rulings and advisory, we've seen that many questions that come, many issues that come are things that if people just want to naturally do business, comply with the law, they may not, many times they may not need to ask such questions. They understand when it applies or not applies. You now use, when you were speaking, I know you were going to talk about FMCG, and we know those who are manufacturers among them, and we know those who are just wholesale. They create a wholesale marketing platform. So the law clearly specifies manufacturers, and so if you're manufacturers, even them, they know when to comply. You know that you are not a manufacturer, you are just an outlet for distribution of goods. You should understand when the law applies to you. So for us, like I will say again, it will require, if anyone is in doubt, it will require a ruling. We are going to respond as may be appropriate. And of course, all these are issues we also envisage, and we have always addressed that in some of our circulars, information circular. And since we have a new document, we are already working on our information circulars already. So we are definitely going to address all these issues. And where they are not addressed, the private ruling can be sought. If anyone is in doubt, you can write to us. We're going to give our rulings based on our understanding of the law.
Thank you very much. Thank you very much. I want to ask questions, if you don't mind. We have some people who have asked questions, and I want to take them. Quick questions, quick answers. The first one, 3 people: Titilayo Fowokon, Fatulu, Ebenezer, Jamiu Sholeye. They've asked the question: are both the FRS and state IRS willing to provide written authorization to taxpayers that have chosen early adoption against future audits by the revenue authorities? Hope FRS will not apply penalty and interest as well as charge the actual rates for the early adopters during the period. Just a quick reply for that, Mr. Olarinde.
Well, I believe I responded to this before, and I know Mrs. or Dr. Fowokon is just trying to get further commitment. Yes, the law, I said the document is an instructional material, and FRS is ready to comply. We are not going to. We are going to ensure we obey the law to the fullest. And like I said, as many persons who have done early adoption, they can write us for us to speak to them. We are developing a document already, and you've seen what we sent out just to clarify where we stand. But definitely we are going to give a commitment to that. It's not more. We are definitely going to consider that.
Thank you very much, sir. Another question here from Anthony Wosa. Withholding tax is most times treated as an extra cost burden to the buyer commercially, because the seller just crosses up with the withholding tax percentage, thereby effectively transferring the burden to the buyer. Are there any thoughts around this? Just a quick one. I think, Taiwo, the regulation sort of has something that addresses this, so I'll direct that to you.
Yeah, you're right. So unless in your commercial arrangement you accept, this regulation makes it very clear that you cannot gross up and pass on the cost of withholding tax to the person receiving the service or the supplies. So if you then agree otherwise, it's your commercial arrangement decision that you have decided to accept. Otherwise, you can always point them to the provision of the regulation that says they cannot pass on the cost to you.
Yeah, and maybe just to latch onto that, what of where it's a non-resident and they have no TIN? So those non-residents usually will say, well, we don't want to bother with the registration in Nigeria, but then the regulation has the double rate.
Yeah, great question. Great question, Ken. So one, if the double withholding tax rate is only applicable to non-passive income.
Yes.
So if you are talking about interest, rent, withholding tax, there is no double withholding tax, because we don't really necessarily need TIN for that scenario. Also remember, and it's good for everybody on the call, Regulation 10G of that regulation says if your income is not liable to tax, withholding tax is not applicable. Now, if you take those two and you read them together, what it means is the only time when a non-resident will have to suffer withholding tax and need to have a TIN is when they have a tax presence in Nigeria and they need to pay CIT. So which means in any case, even without this withholding tax regulation, they should have registered with the FRS. And if they haven't, there's also the window, you deduct withholding tax, you don't have to remit it immediately. You have the opportunity to say, guys, go and register and get in, which you can do in a day. Let's say they now also refuse to register to get in. It's completely their problem to deal with 200% of the withholding tax rate on the active income, because we're trying to address tax evasion as well.
Thank you very much for that. Another interesting one here, Chinelo Joshua. Historically, FRS circulars interpreting the tax laws were somewhat skewed towards driving collection for the FRS, thereby creating more ambiguity for taxpayers. So how will the Fiscal Policies and Tax Reform Committee be involved in finalizing the interpretation guidelines before the circulars are issued? I think my interpretation of this is that taxpayers trust the FRS, but sort of are trusting the committee a bit more. So will the committee be involved in those guidelines as well?
Like I said, we are working together with not only the FRS, but even the State Internal Revenue Services and the Joint Tax Board. So which means on some of these issues, we continue to work together, including implementation guidelines. But one thing we're trying to avoid as the Fiscal Policy and Tax Reforms Committee is not to get to the point of doing the work of the administrator, because then you're going to be crossing your lines.
Absolutely.
So I'll say at this point, what we're doing is supporting them in issuing those guidelines. And the reason is because we have more insights from the policy side as to why something has been put in the regulation, but they have the duty to implement according to the intention and do so effectively. So to that extent, we'll be working together.
Thank you very much. One last question I'll take.
Kenneth, can I also come? Let me just add something. Normally when we draft circulars, we conduct what we call stakeholder engagement. And I'm sure you as PwC, we understand that we are at cost to invite you to be part of stakeholder engagement before even releasing such circular. We try to get your input and get other well-meaning. So aside from the Fiscal and Tax Policy Committee, we will definitely also be speaking to other stakeholders who this will affect or releasing them. So we'll not just be drafting circular skewed at revenue collection. I just want to assure that.
Thank you very much, Mr. Olarinde. Thank you for that feedback. One question here for you. If I have a confirmed refund with the FRS, so FRS has confirmed the refund, can I sell it to another company that has a liability? So instead of me collecting the cash, can we get to a situation where I dispose of it to someone who has a tax liability?
Well, unfortunately, we don't have any rule or law for that right now. All the issues, all the documents you've been having that allows you to transfer or credits, we don't have that in the income tax law. We don't have that in our FI establishment tax law that allows you to do that. So those credits or those credits that lead to refund are to a particular person, and we will for now deal with that person until such is done. We don't know. I don't know about that. For now, we don't have SIP. We cannot do that.
All right, thank you for that feedback. I know, Taiwo, you're very passionate about providing relief for small companies, the vulnerable. One of the issues that has been recurring is validating the status of who a small company is, especially in relation to someone who is the customer trying to make payment, because many of them don't have accounts and things like that. So someone is asking, is there any way to validate all of this so that we know the person is a small company or is not a small company? And the threshold of small companies, is there an intention to revisit that as well?
Yeah, so let me start with the last part of your question. The answer is yes. We're planning to, not even just planning, so we've drafted the law to increase the threshold to 50 million naira turnover and 250 million naira assets, so net assets and turnover. The reason is why we're bringing in assets is you can imagine an oil company still doing exploration, right? Or a power generating company. For 3-4 years, they may not have turnover, but they're not a small company. So the answer is yes, we would increase the threshold. So the first part of your question, how do you know who is small and who is not small? So this is a problem that we've had, not a problem introduced by this regulation. In fact, this regulation is further simplifying that problem. Why do I say that? If you're a small business, you don't have to deduct withholding tax. So the responsibility is on you to know whether you're small. If you now don't know your turnover, you deal with the taxman when they come and audit you. On the other hand, should I deduct on you? Because if you're a small business that is exempted from income tax, I shouldn't deduct withholding tax from you. That's regulation 10G, right? But how do I know that you're small or you're not small? I'm saying that problem exists currently. What we have been doing is just deduct on everybody, right? Which doesn't solve the problem. So this time around, what I would encourage anyone, if you're dealing with small businesses, just have an annual declaration. It's very simple. The same way you ask somebody to tell you their address, your due diligence, you ask for the owners of the business, all those details, your bank account, give us your bank number. It hasn't changed from last time, your tax number. Just include a line, declaration that you're a small company. So on that basis, you can decide not to deduct withholding. If it turns out that they are lying, I think your process also should include consequences, including you discontinue patronage, you recover anything that you have to, incur to the FRS from them. But ultimately, the solution we have for this is the tax intelligence system we are building, whereby we will not need to ask you whether you're small. We actually tell you that you're small, or we tell you that you are big, because we can use third-party data and other intelligence within the system to know who is doing what and the size of their business.
Thank you very much for that feedback, Taiwo. I'll ask one more question and then I will hand over. And that question is around, it's a policy question, to be honest, and maybe not specific to withholding tax, but I think I should just honor the person by asking it from Mr. Adelabu. So he's talking about the interest and penalty regime, particularly interest. The current MPR is very high, and tax authorities, not just the FRS, tax authorities usually don't come for the audits on time, and taxpayers would have done their compliance based on what they believe. But additional liabilities could arise 5 years from now, and interest rate is 30%. That means the person needs to pay the tax plus 150%, as interest. So is there going to be any respite for taxpayers? Would the interest regime be made more bearable? Any thoughts on that or any thinking around that?
Let me start. I think the intention is not to make penalty and interest regime bearable, because you want to drive compliance. What we're trying to do is to make compliance easy, so that you won't even have to incur penalty and interest. And should you decide to not do the right thing, then you should have to deal with the consequences. The underlying principle being that we don't want people to benefit from holding on to government money, because I can actually make a commercial decision to not pay tax and then use the money to go and do treasury bills or government bonds and make money and then pay some little interest later on and keep the balance. So that's why it's tied to MPR. So what we're all hoping for is for the economy to improve and MPR can come down, but we do not intend for the penalty and interest regime to be attractive. It shouldn't be too punitive, but it should also not be too attractive. We want compliance to be easy.
I agree with you. I think, taking it to Mr. Olarinde, I think one of the reasons why it's even a problem at all is the audits are not happening on time, right? And I know the FRS has done a bit of restructuring to ensure that customer service improves. So would we see quicker audits, or would we even see risk-based approach to these audits as well?
Okay, thank you very much. When we start talking about audits, let me start from where Taiwo stopped actually. Why will someone set out not to comply? So you set out talking about penalties and interest is because someone had said not to comply. Well, we know there are situations where some is, and you said something too. It says someone has done his compliance based on his understanding. I'm sure that from where you stand, the definition of understanding should not be different from where such person stands. But what it entails for him to get a full understanding is to build his capacity to be like the PwCs that can understand the law better, or employ somebody that will help do same. So it will limit his level of compliance. And like Taiwo have said, the laws and things that are done is to ease compliance and not to promote non-compliance through easy and cheaper penalties. Now, from where FRF stand, like I said, we have done a lot of work on our risk profiling, and so that those who are supposed to be audited are audited as and when due. Our auditors are when due. So these issues we are definitely looking at audit, and that's like what we said. We have a group. Our audit is now working. Is in the same group with our operational group. So when there are issues of audit, you have filed your returns, and the field office, those we call the RPP, returns payment processing, have reviewed your account and they've seen a case of audit. They quickly transfer it to the audit so they can do what they need to do as and when due. Selecting case will now also definitely be due determined on probably resources. So that's what probably may also limit your, but of course we continue to provide resources and plan our audits, and I'm sure in the coming year it's going to be better. Thank you.
I want to thank you, Mr. Olarinde and Mr. Oyedele, for giving us this time to engage with us in PwC, as well as the many, and we had up to 900 people on this platform, or about 900 people on this platform during the duration of this conversation. We want to thank you, and we hope that when we reach out to you in the future, you would all also oblige us and give us your support as well. So I don't know, participants, if you have the reaction button with you, you can click on the reaction and appreciate them for giving us their time. Thank you very much. I will then hand over to Mr. Siloma to take on further conversation. Thank you.
Thank you very much, Ken, for that. And I would also like to also extend my thank you to Mr. Taiwo, Oyedele, and Femi for unpacking nuggets of wisdom to our valuable participants. And as you've said, we have about over 900 participants. But the reality awaits us tomorrow, right? and that reality is having to deal with the withholding tax compliance, which is not only challenging task for participants, but also one that comes with a lot of significant risks in the event of non-compliance. Now we have to deal with the fact that there's penalties as well as interest rates that are as high as the MPR rate. So coming to the reality of this, at PwC, we have developed a bespoke tool that leverages on technology in order to address some of these common pain points in withholding tax compliance. So this is part of our global strategy, and our global strategy is human-led, tech-powered. So we have developed this tool, and this tool is what we call the Navigate Withholding Tax Manager. So what are some of the interesting features of our Withholding Tax Manager? So our Withholding Tax Manager actually leverages on the latest technology, right? And that is artificial intelligence and machine learning. So what we have done is we have trained our tool, and our tool is actually up to date with the latest withholding tax regulation. And at the click of a button, and depending on the descriptions that of the invoice or the GL line item, it will automatically tell you what is the withholding tax rate to use. This tool is actually a cloud-based tool. By being a cloud-based tool, we have actually made it very flexible, such that it can either be hosted on your servers as the client, or it can be hosted in PwC secure environment. So we just like you to keep it flexible, and depending on what are the IT rules in your business or your company. Also, this tool actually integrates with ERP. It can stand alone, but it can also be integrated with ERP. Name it Navision 365, SAP, or Oracle. It actually seamlessly integrates with it, and at the click of a button, you're able to know what all the transactions that you have conducted in a particular year, what is the withholding tax, and what is the rate it can do. Also, it also helps you with effortless compliance. What do I mean by effortless compliance? We all have to deal with the fact that we have to generate ready to upload withholding tax schedules, either to the FRS or the SIRS platforms. So what this tool does, it actually intelligently knows the schedules to generate, and at the click of a button, you can actually generate these schedules and upload them to the various platforms. As you have all heard, now the withholding tax credit notes, vendors, the suppliers would require you to issue them with credit notes that indicate that you have deducted withholding tax. So at the click of a button, you no longer have to manually sign and prepare those forms. This particular tool can actually do that. One of the challenging tasks that we all know is reconciliations with the amounts deducted vis-a-vis the financial statements as well as the general ledger. This particular tool that we at PwC have developed, we have developed with this pain and mindset at hand, and it's something that it can offer you a report that tells you that this is the reconciliation of the withholding tax deducted, and reconciles it back to the general ledger and audited financial statements. Then one of the things that you have to think about as a person doing compliance is controls. What is the level of controls that you want to have as a business person, right? We have embedded internal control mechanisms such that this tool knows the person that did the work and also reconciles, and the person that is reviewing. So make it easy for our clients and everyone alike. So what do you expect out of it? And why would you choose the Withholding Tax Manager? We have said this tool was developed with the mindset of addressing the common pain points of withholding tax compliance. So it gives you efficiency. Efficiency in the fact that since it's integrated to your ERP or it's a standalone system that you can download scripts, then it gives you that level of efficiency that you're looking for. Accuracy, it is based on the latest withholding tax regulation, so you can expect to have the accuracy and very few errors that come out of it. Security, we have indicated to you it can either be hosted on your servers, or it can be hosted on PwC servers, so you can have the ease of mind that the information of your vendors and your information is secure and there is a lot of integrity to it. What else? Convenience. the automated processes, which is generating the FRS and the SIRS ready to upload schedules, as well as the ability to generate credit notes, gives you the ease of time that you're looking for. So with that, I ask you to give us a call. Give us a call. You have your usual PwC contacts, but give us a call so that we can do a demo for you, so that you can be able to sit at the back and say, wait a minute, this is the tool that is right for me and is right for my business, right? Thank you very much, and I will hand over back to our co-host, Emeka, to go on with the rest of the session. Thank you.
Thank you, team. Thank you so much. And amazing work from all of the panelists. I mean, the messages were very clear, questions very well answered. Team, thank you for delivering on the benefits with this manager as well. I know there's a lot of questions on whether the recording will be made available. Yes, it will be made available. We will be hosting it on our YouTube channel. And I think for all those who attended, you will get the links as well. All the questions, we did gather them because we know there were a lot of questions coming from everyone here. And I think in due course, we will also be sharing more materials with those of you who have joined us. And for anyone who hasn't joined us as well, we would definitely be reaching out if you're a client. So thank you again. Thanks, Taiwo. Thanks, Mr. Olarinde. Thank you, Kenneth. Thank you, Chijioke, team, and everyone on the back end who's made this possible for us. Well done. And for our participants, thank you for staying with us till the end. Do have a great rest of the day.